What's up, YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks. And this is another segment of our top 3 option plays this week, where we're just gonna go over a few different trades, stock fundamentals, and different strategies that you can do to make it through. All right, but first, if this is your first time watching this video, please make sure that you click that thumbs up button. It really helps the channel. Also, subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys. Okay, so a quick recap of last week's plays. So we were bullish on Plug Power starting at $44.55. So you'll see on Monday, we already talked about this in our midweek recap. So I'm gonna just kind of breeze through this. You'll see on Monday, we did jump up to $46.50 around market open, but ultimately it fell for a majority of the week, closing at $40 on Friday. Coming into this week, it looks like, it's trying to continue in that strong uptrend. So make sure to keep Plug on your watch list. We were also bullish on Facebook starting around $345 because of the stock being in such a strong uptrend. Even though we did highlight all of the legal drama that Meta is going through right now, lawsuit after lawsuit, cancel after cancel. So similar to Plug, it did skyrocket on Monday to $353, but it did fall for a majority of the week, reaching $333 on Friday. That was pretty bad. But Monday, it is kind of starting to make a decent comeback also. So let's just kind of see what happens with this. Now, this is just in today. Jack Dorsey, the CEO of Twitter, just stepped down. And he said that I've decided to leave Twitter because I believe the company is ready to move on from its founders. And they already have somebody else, ready to fill his position. But, that's pretty interesting. I know that doesn't have a lot to do with Facebook, but, it's still kind of something to keep your eye on. And lastly was Square. Now, this one we started around $225. This one did pretty well considering we were bearish. And, just with the added bonus of the entire market being Louboutin red, it dropped 20 points on Monday to $205. But then it kind of started to make its way back up, closing out last week around $213. And going forward with our option positions with this segment, I want to focus more on option premiums along with the stock prices, because that's definitely a huge factor in what we're doing here with options. So let's go ahead and get into this week's plays. So this week I wanted to look for option positions in the biotech sectors, with vaccine stocks going crazy right now, all these boosters. But I'm going to be honest with you, they have extremely high premiums in the thousands and really high volatility right now. And even with doing credit spreads or iron condors and things like that, the profit versus the loss just didn't make sense. It didn't seem worth it right now. So I'm just going to wait on those. All right. And the first stock that I want to talk about is PLTR. This is Palantir Tech, a data mining company. And you can see from the stock charts that we are in a clear downtrend right now since their last earnings loss on the 9th of this month. For a stock in such a strong downtrend, I know that you would assume we're just going to go for bearish position, which I definitely want to do. But also just right now, the way the stock is set up, for the short term, I would want to look at neutral positions too. Because just if you see long term, the stock really hasn't moved much. It's been trading in between $20 and $30 for, a majority of the year. So I just want to look for either a put option position or a bearish credit spread. So going into this position, if I was going to do something bearish, I would want to have my entry at least at $20 or 50 cents, something around there. But before I was going to get into any type of plays like that, because it has kind of been pretty bullish, neutral to bullish for a few days. So that's just kind of something to think about. And as far as the options, the implied volatility is not too crazy, and it definitely has a lot of open interest and volume on these. So for the long put, I'm going to pick a December 23rd expiration. Make sure it's on the puts. And this is just going to be something pretty simple. It's just a little out of the money. I would buy the 21.5 put. And so you'll see with that, the most you can lose is the premium. So our premium, 1.32. That's $132. It has a pretty decent bid ask, so that's cool for that one. Now, if I was going to do a call credit spread, which is still bearish, I will pick the December 3rd expiration date, and I will make sure I'm on the calls for the call credit spread, and I would buy the 22 call and I would sell the 21.5. And so for that one, you'll see, you know, we're going to get a credit of 14. It's not that much. Max loss of 36. So it's not the most appealing. So this would be something I would kind of tread lightly with. But you'll see it has a decent bid ask spread also. So, and the last one that I liked was the Iron Condor. So this one is basically 2 credit spreads and we just want the stock to close in between those strike prices. So I'm going to keep the same expiration date. Dang, I could have kept the same call. So we're going to keep the same call credit spread. We're just going to add our put credit spread. So we're going to have both of those. And you'll see that I'm actually going to buy the 20.5 put and I sold the 21. And so with those, this is going to be our Iron Condor. Now this one is a little bit better. Our max profit is going to be the credit that we receive, 34 premium, and the max loss is 16. So that's not too bad. The next stock is SM Energy, trading at $30.21. You know, this stock is definitely giving downtrend, and you know, it kind of looks like it's heading for a death cross. So, you know, I'm interested in seeing how this stock moves. We did just cross below our 50-day moving average, and it looks like we crossed below our 200-day moving average. So that's definitely a good bearish indication, you know, that this downtrend is going to continue for, you know, at least a little while longer. And for this play, if I was going to actually get into a bearish position, even with how amazing the stock market was today, I would have my entry around $28 for a bearish position. I would have a target price around $25 at least. You know, that's not too bad in the next couple of weeks. So for this one, I would do something pretty straightforward because, you know, actually the implied volatility is a little high for this, but the option prices are decent, and they don't have weeklies. They just have, you know, monthlies. So I'm going to do something pretty simple with this. Just bear with me. Okay, so for this one, just with the regular put, I'm going to have an option. I'm going to pick the closest one. So this isn't going to be a super long hold. And I'm going to have the puts. And I'm actually going to buy the $30 put. So, you know, it's kind of close. Now, this one is not too much. The most that you can lose with this is $220. So our premium for this is $2.20. And you'll see our bid ask is nice, you know, not too bad. So I like this max profit 2,000, but that's theoretical in a sense because the stock would have to drop to 0. And I definitely don't think it's going to do that by this time. So I would ignore that. Yeah, it's not too bad. So you can do something like that. That would be cute. All right, and the last trade is Apple. Okay, so right now Apple is trading at $160.24. You guys can see from this stock chart, Apple, you know, it did have a little dip, definitely trailing on this 50-day moving average. This is the white line, given very much so uptrend, and you'll see that it actually just bounced off of that 50-day moving average. So I want to see, you know, what she can do. Is this going to continue above this previous high of $165? Let's see. You know, I want to see what happens with that. The MACD indicator looking good. It looks like it's ready to roll. Histogram looks good. As far as the ADX indicator, it is looking a little slow, so that's kind of a little discouraging. We're still in a strong trend, but this sharp drop, I'm not sure, so I want to wait and see for that one. But the RSI looks really good, very neutral, and, you know, ready to move upwards. So for this position, I'm going to have my entry around 161, 162, and it's pretty much the same. I just always want to at least pass a previous high resistance point. That's just what I like to do, and I think that would be a definite good indication that it's continuing, you know, in our favor. And you'll see here the options for Apple are always going to be cute. You know, they're never going to do too much. Okay, so for Apple, I'm going to be bullish, and I'm just going to pick something, you know, something simple. The prices are cute. Everything looks great. So we can just do a long call. And for this, I'm going to pick the December 23rd expiration, not too much. And I'm going to buy the 162.5 call. Now I know it's a little up there, but it's not too bad. Now you can go further out of the money if you want. That's your choice. But for me, I'm just going to keep it simple, keep it light. Of course, the most you can lose is the premium. So the premium we have is 3.6. Now this one, the bid ask spread, you know, it's a little, but it's not too much. We can work with that. And yeah, so this looks pretty good for me. So that's just kind of something that you can do for the rest of this week. Now, Make sure that you guys check out this video on option credit spreads, where you're gonna get paid to open your position. You're gonna be profitable as long as your option strike prices expire away from the stock price. So I'm gonna explain all of that in the video. Don't worry about it. Just make sure you check that out. Click that, okay?